It's been an interesting environment. Certainly there are lots of things at ConnectOne that we try to control. But what the Fed policy is and where rates are going and how the market reacts to those rates is something that's somewhat out of our control. And so, yeah, it's been very challenging, not just for ConnectOne, but for banks in general.
Frank, what sectors of the economy are you seeing actually absorb the effects of the Fed tightening? And what areas are maybe still waiting for the monetary policy lags to kick in?
Yeah, I think when you look at it, I think that question would be answered differently from different bankers from different parts of the country. But certainly here in the New York metro market, at ConnectOne, we certainly see that the vast majority of our clients are absorbing those rate increases, and it's showing up in lots of places, right? Rents are up. If you've been to a restaurant lately, you see that the price of a meal is up. And I know, there's inflation component to all this, but that's part of the rate increase. And so it's building into the economy. And I think we're seeing it in higher prices, higher costs, and it's being incorporated in every aspect of our economy. I think our builders, for one, are for the first time in a very long time having to figure out what are the interest rates and what's the interest component of a construction project. But they really didn't have to think about that too much in the past. So all these things are leading to higher prices and yeah, definitely a more normalized environment where interest has a cost.
But nothing normal about the current housing market, right? I mean, in terms of residential, especially previously owned homes, that market seems to have grind to a halt.
So at ConnectOne, we do a lot of new home building. We don't see a lot of the mortgage refinance, although we do see some. And yes, for the existing home market, it's a difficult place today because folks have low interest rate loans. They really don't want to move and give up that rate, or they can't. But on the new housing front, we do see a level of optimism where, as you know, in the New York metro market, and by the way, as the nation, we are underhoused, right? There's just not enough apartments, not enough housing units. And so, new product that's coming to the market is able to absorb the higher costs due to inflation, the higher costs due to interest rates, and there is a ready market buying that product.
We hear all the time that builders offer incentives. They're buying down points or they're giving lower rates. And I was talking to a land developer the other day who said they are giving builders incentives. And I thought, where does the buck stop? Because obviously at some point somebody's got to pay the price.
The end consumer pays the price, right? So we're certainly seeing prices have somewhat leveled off relative to new home product. We're also seeing it in the rental market. Rents continue to go up over the last couple of years at a pretty drastic clip. We are, however, starting to see that level off, and there are some places where we are seeing some level of concessions. So I do think we're getting to a more normalized place. And I think that's part of the message that came out of the Fed is that the economy is beginning, as you first question you asked, beginning to absorb a more normalized rate environment.
Your notes, it says that you think the economy is on a soft landing trajectory. I'm wondering what you see as the CEO of a bank that deals with small businesses and deals with lenders. What are you seeing that maybe some of the other Wall Street prognosticators that are still calling for a recession are missing?
Well, look, I start with employment, and in all the markets that ConnectOne serves, we're seeing a shortage of people to fill jobs. We're seeing very, very low unemployment. We're seeing a strong labor market overall, rising wages, and that to me underpins everything. Uh, People that have a job, feel good about their job, and see their wages rising can absorb those changes in the economy, higher interest rates, and everything else. They can absorb rising rents. They can absorb higher costs of food and housing and everything else. And so, to me, that's the foundation on which the economy is built. And no one's been able to convince me that that's going to change anytime soon.
I just want to ask about deposits. how sticky are they? How do you fight deposit flight? Is it just a question of the rate you offer, or do you think that depositors also really look into services and the culture? I mean, what's your view on that?
Look, I think there was definitely back in March a reorganization of the deposit market versus large banks, small banks, medium-sized banks, where people had funds. The entire notion that interest wasn't being paid on certain types of accounts, FDIC insurance coverage, lots of questions, lots of things came to the fore in those few weeks of March and early April. I think the market overall, though, has pretty much settled out, and people are pretty much staying where they are. There is the ease of being able to move money from bank to bank. But folks, ConnectOne is mostly a business-oriented bank. People come to us not necessarily for the highest rate. They come to us for services. We have clients who have multiple types of businesses with us. And so rate is not the number one thing. That doesn't mean we're not going to pay a market rate, but it does mean that folks are making decisions in banks like ours relative to things like service and availability and the ability to talk to decision makers and what the other side of the transaction looks like if there's a loan there or a business loan or something else. So I think things in general have stabilized. Keep in mind, however, beside the Fed raising rates, they've also been shrinking the money supply and shrinking the Fed balance sheet, right? Earlier this year, we saw for the first time since 1949 that M2 actually shrunk, and the Fed is on a track to continue to reduce the size of its balance sheet. That's putting a lot of pressure on banks and other financial institutions.